Hi, everyone, and welcome back to Beyond Insights. Today I'm joined by a guest that many of you may know or have heard of. Blake Oliver is the co-host of the Accounting Podcast, a top 25 business news show on the Apple charts, and the most popular podcast for accountants and bookkeepers worldwide. He's also the founder of Earmark, an app that offers NASPA-approved CPE for listening to your favorite accounting and tax podcasts. And he's been named one of Accounting Today's top 100 most influential people and recognized as one of the CPA practice advisors 40 under 40 in the accounting profession. So thanks so much for joining us, Blake.
Happy to be here. Thanks for having me.
I must say I have listened to a lot of your podcasts over the years, rather, as someone who also didn't come from an accounting background initially. Now working in accounting software, they really helped me to learn a lot about accountants and some of the problems that firms face.
Well, thanks. I'm glad I could be of help.
So I thought I would launch in, yes, with your book, which thank you very much for sharing with me. I started reading it pretty much as soon as you sent it to me and already got pretty far. I must say it's really easy to read and there's some really interesting stuff in there. And I thought maybe I would unpack a few of the things that I found. So the book, for those listening, if you don't know it, is called Building a Sustainable Accounting Firm. So I thought maybe I would start with some of your reflections early in your career when you were working as an accountant for a mid-sized firm and you realized that the expected model of billing per hour was quite absurd because it effectively rewards inefficiency. I thought maybe you could elaborate on a little bit about why you think billing per hour rewards inefficiency.
Well, it goes back to when I was a bookkeeper and I made the shift from desktop to cloud. And I started out billing $20 an hour, keying transactions into QuickBooks. I would pick up paper bank statements and bills from my clients, and I would enter those manually one by one into desktop accounting software. And I liked that job. Actually, it was great. I'm a musician, so I would listen to music. I'd watch TV. It was kind of mindless. But then I discovered Xero, and I discovered that I could import a giant file of transactions and code them all in one go with cache coding, stuff like that. And I discovered these online bill pay systems and payroll systems, all the stuff we take for granted today. And I started plugging those together into my clients' accounting systems and just automating the flow of data. And what I discovered was that I was able to cut the work down by 80%. I cut my data entry work out. And so all I was doing was reviewing, approving, overseeing. And I was billing hourly at that time. So basically within like 1 or 2 months, I realized if I didn't change my model, I would have 20% of the revenue that I had before. So I immediately fixed the fees for my clients and they got more service from me and I did less work and made greater margins. And that was fantastic. And that essentially is the problem with hourly billing when you discover technology that makes you way more efficient. You will hurt yourself if you become more efficient. And this is why in big firms, especially, they can't innovate. They struggle to innovate because the staff have no motivation to become more efficient other than their own intrinsic desire to do it. But unless they've got that, there's no reason, because what'll happen is they'll just get more work. They'll get more clients. So everybody just kind of goes at sort of a moderate pace. Nobody tries to go fast. Nobody tries to go super slow. And it just hinders technology adoption. There's no reason to be more efficient.
Yeah, it makes a lot of sense. As you become more efficient, if you're following that traditional model, you are punished for being more efficient by having to take on more work.
Yeah. And more clients, right?
Yeah.
Which is the hardest part about it, is the client relationships. That's something that I realized, is that it's not about how much work there is to do, how many tasks you have. Really, the hardest part in public accounting is all the clients trying to get to you, and having
Yes.
to communicate with them, the volume of emails, that sort of thing, right? So it's like, it's not really about how much work you have. It's more about how many clients you have. And if you become more efficient, you just get more clients, and then it's worse.
And if you are able to have a small set of clients who you can dedicate more time to, then you can actually build out that relationship as opposed to trying to work for a lot of clients and not really being able to have a proper relationship because you're so busy just trying to get the work done.
Mm-hmm. And with fewer clients, you can spend more time building the systems to automate all the day-to-day mundane work. So yeah, it's better. It's better that way. But yeah, you have to fix the fees. And I think a lot of firms are coming around to this. I mean, many, many, many firms are now doing this. But the problem with the big firms is that they still have to translate this into an hourly billing system because their practice management systems are all set up for hourly and everyone has to fill out timesheets. And so even though they're trying to do fixed fees, it's still sort of a hack. It's not the true way it should be. And I don't know when they're ever going to move away from that.
Yeah, I think in bigger firms, it takes a lot longer to be able to implement these kind of changes.
Yeah, and I don't know if they're ever going to do it. I mean, the hourly timesheet model has been around for 100 years, and it works. That's the thing about it. That's why it stuck
Mhm.
around, because it still churns out 20% profit for the partners. I don't think it creates a very good job for the partners, other than like the managing partner who doesn't actually do client work,
Right.
because the partners work more than anyone else these days. When you bill hourly, you are constrained by your capacity, by your time. And the only way to make more money is to work more hours and to spend more time in the office. I don't like that. I want to spend as little time in the office as possible. I like to call myself a lazy CPA.
I love that. Finding work-life balance as a CPA, which I think a lot of people might be listening to this thinking, what do you mean work-life balance? Like, pick another career. Because I think so many CPAs are now facing intense burnout because of that expectation of spending more time in the office, um, which I think is another reason to take the sort of lazy CPA approach, as you say, to be
Well,
more efficient.
it's a self-inflicted wound.
Yeah.
We have made the profession this way. It doesn't have to be this way. And I know that because I came to accounting as a career changer. I was a musician before I was an accountant. I majored in cello performance in university, and I graduated, and I was trying to make a living playing weddings and gigs and getting paid like $100 to drive all the way across LA and using all that money on gas, basically, before I got home. And I was not happy. It's funny because I think you ask a lot of accountants and they would love to have a creative job like that. And I'm going to tell you, it's not so great. You end up working a lot. And I was working all the time and trying to practice too. And so when I discovered bookkeeping and then got into accounting and got my CPA, I was so happy because I had a job that let me work normal hours. It was flexible. The work was varied and interesting. I had a variety of clients. I mean, all the things that people complain about in accounting, I actually loved. I didn't have a problem with the work being boring or too much work. I could work as much as I wanted. And I think it's basically because I wasn't working in a traditional firm. I was working for myself. And that's the problem with accounting. It's not the work, it's the firms and the way they're set up. It's the business model is not sustainable. And that's why I wrote the book, because if you change the business model, you can build a sustainable firm. That's the title of the book is Building a Sustainable Accounting Firm. And I didn't do that consciously. I just did that because I didn't know how a traditional firm was supposed to operate when I started mine. So how did we do it? We could all work from home. We worked flexible hours. We only had to have a certain amount of overlap. You could work as many hours as you wanted. You didn't have to work full time if you didn't want to. You could choose, what kind of clients you wanted to work on. I mean, we didn't have we didn't evaluate people based on timesheets. We didn't bill based on timesheets. Yeah, we just didn't do anything that these traditional firms do. So
And I think it helps coming with that outside perspective because you don't have this preconceived notion of how the firm should operate, the kind of people you should hire, the kind of hours you should work. Um, And I remember you said in your book as well that this has meant that you didn't face a staff problem. Like so many people are complaining it's so hard to find good people to hire. And you're saying,
Yeah.
well, maybe if you give them a bit more flexibility, they don't all have to work full time or overtime or whatever the case may be, you are probably missing out on some really great candidates.
100%. I had bookkeepers n- asking to work for me. I had them reaching out, wanting to work for me. I had a surplus of talent because I was willing to give them what other firms weren't. So it's really just being creative, thinking outside the box. I think part of the reason that the accounting profession struggles with this shift is because we have built our firms around the theory of cost accounting, which is accounting that was developed over 100 years ago. I guess back in the late 1800s at this point. So we're talking, what, 150 years ago, maybe starting 200 years ago. It was developed to manage factories and railroads and the industrial economy. And accounting firms in the early 1900s took this theory and decided to apply it to themselves. They said, we're going to look at our firms like they're a factory, and our people are machines, and
Mm.
our machines produce hours that we bill to clients. We sell hours. And the theory of cost accounting got applied to accounting firms. And it's a classic example of a profession taking this concept that they applied to their clients and then applying it to themselves wrongly because people aren't machines. And so it makes, like, if you think about it, right? If you treat people like machines, are they going to be happy? No, people want to be treated like people. So that's basically the problem. And so actually in my book, I've always been fascinated by this since I learned cost accounting.
Yeah.
And so in my book, I explain basically what's wrong with cost accounting and why it fails to work for accounting firms that want to move to a recurring revenue model, and basically also why it fails to do good accounting for any business that operates on a recurring revenue model, which includes software, subscription software businesses.
Yeah, it makes a lot of sense. I mean, if you think about it, the way that we work has changed so dramatically in the past 150, 200 years. We now have knowledge work as opposed to just working in factories. And the idea of having time as kind of your product doesn't really make sense. And I think this is becoming more apparent now in the age of AI.
Oh, yeah.
And you've said, yeah, AI will completely break the hourly billing model. So I thought maybe could you elaborate a bit on that?
It's the same way that cloud technology broke the hourly billing model for bookkeeping and accounting. Cloud allowed us to become 5 to 10 times more efficient with what we did in a specific area of accounting, client accounting services. And we saw margins increase, and that became one of the fastest growing service lines in accounting firms as a result. I believe that AI is going to do the same thing for all the other areas of accounting. So audit and tax and financial reporting, all this stuff that we couldn't automate before, AI makes us 5, 10 times, maybe even more efficient. And it's going to really separate the people who can use these tools from those who can't. I can tell you, as a power user of AI, it makes me 10 times more efficient, more productive. I can now do stuff on my own that would have taken a team to do. And so how do you rationalize an hourly timesheet model when I could work 1 hour and do in 1 hour the work that might take somebody a day to do? It doesn't make any sense.
No.
There's What am I going to do? Increase my hourly rate by 10? 10 times? No. So we have to come up with a new model for that. So AI is a productivity booster and a differentiator, and it's going to widen the gap between top performers and average and bottom performers so dramatically. It's also going to reduce the need for headcount. You no longer need to have more people in order to scale. It's not linear. We don't need to add hours to make more money. We can make more money without additional hours at all. We can even work fewer hours and make more money. So it's all broken. The whole relationship between hours and revenue is going to be completely destroyed.
And I think that makes a lot of sense if we think about talking about recurring revenue, as you mentioned earlier, and the way that SaaS companies like us at Sift, the way that we look at things, the metrics that you look at as a SaaS company, and the way you think about what you're charging is more in terms of things like monthly recurring revenue, annual recurring revenue, the cost to acquire a customer, as opposed to some of these more like traditional metrics. Can you maybe speak to how accounting firms would benefit from thinking like SaaS firms?
It takes a big mindset shift. And there's a whole chapter in my book about subscription revenue. And there's a section about the subscription income statement, which is a concept that I learned from Tien Zuo, who's the founder of Zuora, which is a company that helps big businesses manage their recurring revenue contracts. He wrote a book called Subscribed, Why the Subscription Model Will Be Your Company's Future and What to Do About It. And in that book, he lays out the subscription income statement concept as an alternative to a GAAP financial statement. And essentially what a subscription income statement does is it separates out recurring revenue and recurring costs from non-recurring costs. And so what we can look at is we can look at our recurring revenue every period and our recurring costs, which in an accounting firm would be the staff that it takes to serve those clients, like the fixed costs and some general and administrative. And then we can calculate recurring profit when we subtract all that. And below that, we include sales and marketing. And that's a very simple one, right? And basically the difference, and it's hard to explain without a visual, is that in a traditional income statement, the problem is with like sales and marketing is that it's always a period expense, right?
Yeah.
But a software business, a subscription business, views sales and marketing as a capital investment because the sales and marketing dollars result in customers. So you're investing marketing money to create a customer asset. And that customer asset then is like an annuity that lasts years. And so that's how subscription businesses think about it. But in a GAAP financial statement, we expense the sales and marketing because it's assumed that sales and marketing is an expense for the period related to period revenue. Because in the past, that made sense because you would make a bunch of widgets and then you would take them to the market and your sales and marketing expense were to sell those widgets. So it made sense that we would then always expense that in the current period. But in a subscription business, we're not making widgets anymore. We're acquiring customers, right? So the sales and marketing dollars are basically acquiring a future revenue stream. And that's what I try to explain in this book. And if you look at it that way, it allows you to spend more on sales and marketing because you're buying a future revenue stream, an annuity. So firms will spend more, and they should spend more to acquire customers. And that's a big one. So I learned this spending 5 years in 2 different software businesses after I left public accounting. And I got exposed to this. And it was amazing to me that in a software business, we didn't look at traditional financial statements at all. They're basically useless. And it's crazy that we actually haven't created some official GAAP financials that make sense for software businesses. So, but they exist. They're called SaaS metrics, and I encourage any accountant who's interested in learning how to build a subscription revenue model for their firm to learn SaaS metrics. And there's great resources online where you can go learn about this stuff. or you can check it out in my book.
Yeah, I think really, really powerful to think about. And I think the big shift here really is at looking at future revenue and a much longer term view. So you're looking at acquiring customers, for example, that are going to be subscribers. If you think about the subscription model for a long time, maybe for many years. So you're not
Yeah.
thinking of this short period, oh, okay, we've spent on marketing now. It's an ongoing thing.
Yeah, here's an example. I think that'll help illustrate it. So let's say a customer pays us, just for sake of illustration, $100 a year. And we spent $100 in sales and marketing, right, to acquire that customer. In a traditional financial statement, we'd actually be losing money because there's a cost to service that customer for year one, right? So we had $100 of revenue, then there's some sort of like cost for our staff, right? And then there's $100 of sales and marketing. So we're at like negative money at this point, right? Negative income, negative net income. If we look at it from a subscription standpoint, maybe that customer pays us $100 a year, right? But we know from prior experience that our customers tend to stay with us for 10 years on average. The lifetime value of that customer is actually 100 times 10. It's 1,000 minus whatever it costs to serve them. But we know that's going to be less than that. So, but let's ignore the costs right now, right? Just for simplicity. So in a subscription income statement, we actually have, $1,000 of revenue in the future right there, right? And we've spent $100 this year to acquire it. So that's 900 in, future profit minus the costs to serve it, whatever. But you get the idea, right? The traditional income statement shows us losing money, but in reality, we're making money. It's just in the future. And I guess that's maybe this is an illustration of how traditional accounting is backwards focused.
Yes,
And we need to change it to be future forward.
that makes a lot of sense. And I think the technology that's available now obviously feeds into that because you are able to look at real-time data. You can generate projections much more easily, and you really can be more future focused.
Yeah, it's amazing how easy it is now to learn how to do financial planning and analysis or create projections. AI can teach us all those things that we didn't learn in our accounting classes.
And if you think about some of the SaaS metrics that we've been discussing, what would you say are the maybe top three metrics that you would encourage all accounting firms to start focusing on instead of those traditional gap numbers?
Okay, so the big ones are annual recurring revenue or monthly recurring revenue, right? How much revenue do your subscribers, your customers, generate for you every year? Then there's annual contract value. So what's the annual contract value of each subscriber? You could do an average. Churn, this is a big one. What percentage of your subscribers decide not to renew every year? And then customer lifetime value. That's how much revenue on average you'll earn from each subscriber, and gross margin over the course of their business relationship with you. And then there's cost to acquire a customer. How much in sales and marketing does it cost to get a new subscriber? Which you can calculate by adding up your total sales and marketing costs for a period and then dividing it by the number of customers that you got. And basically, those numbers are really all you need. You can then calculate what's called the CAC to LTV ratio, which is comparing your cost to acquire that customer to its lifetime value. And that ratio tells you how healthy your sales and marketing is and whether you're pricing correctly. And a lot of companies try to aim for like 1 to 3. So you want to spend $1 to acquire a customer who's going to give you $3 in future revenue or future gross margin. So that's pretty much it. And let's look at that instead of utilization and realization and billings per hour or something like that, right? Hourly rates.
Right.
And
And
it
I
really
suppose
doesn't matter what we're charging on an hourly basis because all of our people are fixed costs. That's the crazy thing.
Sorry, I was going to say, I suppose the other side of this that we haven't really looked at is if you are treating clients as subscribers, that means that there's some kind of package or something that they're subscribing to. So you're kind of turning your services into a product or productizing them. I wondered if maybe you could speak to that a little bit.
Yeah. Instead of waiting for them to come to you and ask you for things, you're proactively providing an ongoing service. So that could be monthly bookkeeping and accounting, fractional CFO services. You create a scope of work. This is what we do for you every month, every quarter, every year. Same thing with a tax return. That's actually really easy to productize because it literally is a deliverable, and filing it's a deliverable. And you can upgrade that by adding planning meetings, do some tax planning, maybe financial planning, that sort of thing, answering questions. A lot of firms are afraid to do this because they're worried about capacity and scope. They're worried about clients asking for too much and having difficulty, getting the price right. And that's one of the things that is nice about ours is that if you're billing hourly, you're never going to lose money on the engagement. I put that in air quotes. The thing is, you're never losing money on any individual engagement because your costs are all fixed anyway. So you're just not pricing properly. And so the way that I advise firms to get around that is to regularly review the scope of work for your clients and incentivize staff to point out when the scope isn't right so that you can reprice, and to have flexible contracts and agreements with your clients so that you can increase the price next month if you got it wrong. And it's really important, though, if you're going to do that, to have somebody in the firm who has the capacity to do this. There really needs to be somebody who's managing the clients that isn't doing any client work, so they can make sure clients are properly priced. They can do the increases, and you really need somebody who's like not going to be shy about it. And I know this is a problem. Accountants are really nice. We are too nice, and I'm guilty of this too. And we don't want to charge our clients a lot, but we really undercharge them. The good news is that these AI chatbots are really great at pricing, and they don't have emotion. And so one thing I recommend everyone do is, if you use ChatGPT or Claude, is create a project and create like the pricing project where you can just tell it everything about a particular client, and it can advise you as to, am I pricing it properly? How can I increase the price? Like it's basically a free consultant. Well, not free. It costs, $20-$30 a month, but the best investment you'll ever make.
Yeah, I think that's a really good practical example also of how AI can help you here.
Yeah, it can be your advocate, big time.
For sure. And I suppose the other topic that we haven't really touched on that you also mention in the book is the power of finding your niche, of finding a specific industry that you focus on, and how this can also really help you. Maybe you can touch just briefly on that.
Um, Niching. Yeah, it's funny because in my firm, I didn't really have a niche, or it wasn't an industry niche. Like I didn't just serve real estate agents or gyms or software companies or what have you. I had a bunch of different clients, but I guess you could say that we niched on services. Like I had a very limited scope of services for my practice. We did bookkeeping, we did payroll, and we did bill pay. And we didn't really do much more than that. And it was great because it limited the scope of what we did. So I didn't have to worry about us going out of scope too much. So I suppose you could say our niche was a services-based niche. Niching is so important because it allows you to create a defined technology stack. This tech stack, the different apps you use, puts the work on rails. It makes it easier to train your staff. Similar clients means similar types of accounting. You're not learning all different types. Like, I can't even imagine what it'd be like to serve e-commerce and nonprofit at the same time. It's just so wildly different. So it's really about it's about becoming more efficient and also being an expert. And now that people can work with accountants anywhere, regardless of geography, how do you differentiate yourself? You're not just competing for clients in your city with other accountants in your city and using relationships to get clients. I mean, it's expertise. You want to be the expert in that field for that type of client. And how do you do that? Well, you just work on those kind of clients a lot, and you then get out and you speak and you go on social media and you talk about it and you share your knowledge with those people. And some of the most successful accounting firms basically got started that way. And a great example is Brandon Hall, the real estate CPA. He has built an entire practice just serving owners of real estate investors, and that's all they do. Or Sandra York, who burned out at a top 100 firm and now only serves personal fitness instructors who own gyms. So I'm a big fan of niching, and I recommend everybody do it if they can.
Yeah, it makes a lot of sense. I think especially as a way to stand out, showing that you're an expert, that if, you use marketing well, you use Facebook or Instagram, wherever your customers are, to show I'm the expert in this area. This is some information I can share perhaps for free, and then spreading also by word of mouth. As soon as people know, oh, you're the real estate CPA, then they will come to you.
Yeah, don't be afraid to share knowledge. Like, you're not going to lose revenue because you gave away some free advice. People are going to come to you to execute on that knowledge. Like, they'll learn from you, but ultimately the ones you want as clients are the ones who don't want to do it themselves. So those folks will come to you in droves because they'll be listening, they'll be learning, and then when they finally need help, you've already got them in your circle.
Brilliant. I'm going to wrap up with a few rapid fire questions for you. So if you can just tell me the first thing that comes to mind.
All right.
What's one book that you would recommend to all our listeners to read? I'll have to say, aside from your book, which I will obviously also link to in the notes.
Well, I guess I would say it's that book that I mentioned, Teens Woes Subscribed.
What's one piece of technology that you think is being overlooked that more people should take a look at?
Well, AI is definitely not being overlooked. I guess when it comes to AI right now, and this will probably be outdated really fast, it's this AI agents. That's a hot topic. There are tools you can look at right now to build your own. And so one that I've really been playing a lot with is Zapier agents. You can build your own AI agents, which act autonomously and have tools, and you can create instructions in plain English. What's really neat about it is you can connect them to Zaps. So you can have agents combined with a traditional rules-based workflow, which is the best of both worlds. And you can get some really, really interesting results.
Oh, very cool. And a last question, if someone wasn't paying attention to this podcast and they just walked away with one message, what would you want that to be?
I would want that to be accounting can be an amazing place to work. It can be one of the best jobs in the world. All we have to do is change our mindset as a profession.
Oh, fantastic. Well, thank you so much, Blake. Thanks for taking the time to be on the podcast. Really enjoyed our discussion.
Thanks, Alex. Likewise.